European shares edge shy of 4-month highs, investors pausing for breath after a 4-day rally. All this as General Electric conjures up a 2.5% increase in second quarter profits, solid demand in the US offsetting weakness in Europe. Joining me straight away to throw some light on the outlook for the equity markets is Virginie Maisonneuve, Head of Global Equities at Schroders. Virginie, thanks very much for joining us today. We've had a reasonable run recently. What, in your opinion, causes the next move up or down? Is it the concerns about Spain or the earnings in general?
I think the earnings have been pretty much discounted in terms of people expecting really bad set of earnings. And actually what you're seeing is some stocks going up on earnings that are bad, but not as bad as people expected. So I think we have a certain relief going on there. Now, clearly, in terms of Spain, what's going to matter very much is the speed of disbursement of the bailout for the banking system, and clearly as well how the bond yields are going to perform. So this is really important to watch.
And what about global companies? If you stand back, if you can, all of them clearly showing some effect of the Eurozone slowdown. But are US companies any more immune from it than ones that are actually listed and based in Europe?
Well, you know, for us as global stock pickers, what we look at really more than the place of listings is where the earnings are coming from. So if you are a global company listed in the US and you do a big part of your business in Europe, you're going to be affected the same way a European company might be affected. All this said, we have seen from US companies a pretty good set of results overall, as they've been able to mitigate by a domestic economy that's done quite well relative to the rest of the world.
So do you expect the European earnings, which obviously really get into their running stage next week, to be similar in tone?
I think it's going to be very patchy. I think that what we have to do is to look at how those earnings compare with valuations. In some sectors like energy and in some cases materials, we are back to valuations that we've last seen in the fourth quarter 2008. So again, it's not so much how bad they're going to be, that how bad are they versus what people expect and versus valuation. So all in all, it's a stock by stock, exercise.
And are we back on the defensive, generally just putting our money into the defensive sector for now, or not?
I think what you want to keep is a balanced portfolio with a very disciplined attitude with regards to trading. Take a bit of money out of your outperformers, putting money into your underperformers, and clearly in the case of those cyclical stocks who might be back to fourth quarter 2008 in valuation, maybe start topping up a little bit.
And assuming, what about sort of favoured sectors and strategy, as you just mentioned, assuming the banks are something you're very wary of, where do you put your money now to get the returns that you really need to get?
I'm still quite underweight financials. I do not have any peripheral financial banks. I'm still quite comfortable with some of the core US names as well as some of the Asian names. And in Europe, as I said, I'm very cautious still.
OK, Virginie, thank you very much indeed for that. Virginie Maisonneuve there at Schroders. That's it for now. Join us at this time each weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Nigel Stevenson. This is Reuters.